A little bit of a complicated story. It's hard to know where to start. I'm taking a look at shares of Bed Bath & Beyond now. Of course, on the day, you're off about 20%. Exactly 1 year ago, June 30, shares peaked at around 33. You're still off now from that high, 85%. It's really hard to understand. Mark Tritton, of course, CEO, stepping down, coming in another sort of lackluster top and bottom line for the quarter. Some inventory issues, some activist issue with the baby division, of course, but really just sort of a big picture struggle through the pandemic. This is a company that really highlights that struggle.
We can dig into the struggle that much more with Anthony Chukumba, Managing Director at Loop Capital, Bed Bath & Beyond, a sell rating on the terminal. And Anthony, it feels as though you're pretty passionate that this company is going one direction and it's down.
Absolutely. And it's funny, you know, in the intro, you talked about the pandemic and them being some sort of pandemic victim. I absolutely positively disagree with that. I mean, home goods retailers did really well last year and the year before. And I had visibility on that because I cover RH, I cover Williams-Sonoma, I cover Floor & Decor. I used to cover this company at home. Benefited from that. Bed Bath & Beyond, not so much. And so, you know, they really have lost a ton of market share and a ton of consumer relevance. And now that the macro is a headwind as opposed to the tailwind that it's been the past few years, they're in a very bad way.
They were in a very bad way, though, Anthony, before Mark Tritton arrived. And there was a lot of high expectations, I think, for him, given his previous employment and his accomplishments while he was at Target here. I'm curious that what transpired over the last couple of years, or rather, what didn't transpire, that sort of led them, A, to the company to this decision that he needed to be replaced, and B, to the fact that they haven't been able to keep up with some of the competitors that you just named.
So, look, I think that, Mark Tritton, when he was named CEO of Bed Bath & Beyond, it was seen as a real coup. I mean, this is a guy that was head merchant at Target. That's one of the best head merchandising jobs out there. But he wasn't ready to be the CEO of a publicly traded company. It's just that simple. Look, I think that they've actually done a lot of the things that I would have asked them to do over the last couple of years, like rationalizing their merchandise assortment, bring in more private label products, making their products more price competitive with the Amazons of the world, investing in omni-channel, divesting non-core concepts. They did every single thing you would want them to do, but I just think that the patient is too far gone. The one thing that I will put on him that never made sense to me was aggressively buying back stock when the company was struggling mightily. It never made sense, and all it's done is really impaired their liquidity position.
What do you make about unlocking future value at this point? A lot of activists will say that word loosely, looking at maybe the sale of the Bye Bye Baby division. Is there any way for this company to still unlock value, in your opinion?
No, absolutely not. I mean, look, there is value in Bye Bye Baby, but we've just got to keep it real here. I mean, Bye Bye Baby probably did about $70 million in EBITDA last year. The most anyone's going to pay for that is maybe 10 or 11 times. So Bye Bye Baby's maybe worth $700 to $800 million. The company right now has net debt of $1.3 billion. So, selling Bye Bye Baby is not going to be enough. It's not even going to be even remotely close to enough. And I could foresee a scenario in which Bye Bye Baby is sold, but out of a bankruptcy.
Oh, okay. So calling potential bankruptcy. Well, to avoid that, Anthony, Sue Gove, does she become permanent CEO? Who do you want to see bringing the leadership to navigate these sorts of waters?
Look, here's the problem, okay? And I don't know Sue Gove from Adam or Eve for that matter. It's going to take a long time to, first off, find, interview, negotiate with a competent CEO. And by the way, good luck with that. Last I checked, there aren't a lot of people who are trying to get on sinking ships. Usually they're trying to get off. But let's just even assume that they do find somebody that's incredibly talented and actually wants the job. It's going to take him or her a long time to figure out where the coffee machine is, much less formulate a turnaround plan and start to execute that plan. And these guys are running out of time. I do not believe, based on the little I know, that Sue Gove is the permanent answer, and to some extent that makes the situation even worse from my perspective.
Yeah, certainly not, I guess, what you would want in a traditional CEO, definitely more of a finance person. Maybe there is something salvageable here. Anthony, maybe we can talk about what can be salvaged, even if this is not a standalone, publicly traded company. Maybe it can continue on in some form or another. Is there value in the real estate? Is there value in the brand? What could potentially be left?
You know, whenever retailers get in trouble, people start to talk about the value of the real estate. What a lot of people don't understand is the vast majority of retailers do not own any of their real estate. I mean, you know, maybe they own a couple stores here and there. Maybe they own a distribution center here or there. Most of the stores and distribution centers, for that matter, are leased. The only value here is in Bye Bye Baby. Like I said, maybe it's worth $700 to $800 million. I mean, the Bed Bath & Beyond brand. I mean, we're talking like maybe a couple $1,000,000 bucks. I mean, there's just not a ton of value there. So no, there isn't this sort of unlocked value that people are just sort of overlooking. You know, look, you know, I know you mentioned an activist before, so let's put it on the table. Let's talk about Ryan Cohen. The emperor has no clothes. I mean, this company is in a bad way, and the notion that this guy is somehow the second coming, not so much.
As an equity analyst, focusing on the fundamentals, the health of the balance sheet, maybe the mistakes of buying back shares and sort of further weakening the financial position, what cues are you taking from the way the bonds are trading on this company, the way that you said maybe they don't own the real estate? How are you looking at this from a cash flow, from a sort of bottom-up way, that how you're rethinking the balance sheet and the cash flow of this company today?
That's a great question. And to some extent, the bondholders were the canary in the coal mine, because they essentially, Bed Bath & Beyond has publicly traded debt that matures in 2024, 2034, and 2044. And those bonds have been trading well below par for quite some time. I mean, you know, they are in distressed territory. They're trading as junk. And, you know, look, we're still working through our numbers, but it's, you know, look, they said that quarter to date, second quarter comparable sales are down 20%. This is starting to look real scary.